George Young, one stock you like in the Villere Balanced Fund is Financial Engines. Seems as though this stock really bottomed out last year. It's got a brand new CEO. Tell me why you like it.
Good. That's one of the reasons we like, because it has in fact bottomed out. This is a play on the 401k business in the United States, and you got to understand that all the 401k participants can't get directions from their bosses, and that's IRS rule, that's Department of Labor rule, so they need some sort of way of making a good decision on which mutual funds they should have in their portfolio. This company has $100 billion in assets, a lot of money. They have 840,000 participants, and they've got 600 plans, so Raytheon, Dell, Ford Motor, they need to have a method for their participants to be able to choose their retirement plan properly. Fiduciaries can't tell them. That's Department of Labor regulation. So for 15 basis points, you as a participant can use this service to be able to pick what's appropriate for you. The company was started by Bill Sharp, who's a Nobel laureate. He's no dummy. So this was helpful for people to be able to pick the right stocks. Very profitable company, growing at, we think, 25% per year. Love the stock.
Are you also a fan of Men's Wearhouse?
Yep.
They're on a great run since December. It's up around 25%. Tell me what's going on at Men's Wearhouse, especially with regard to that Joseph A. Bank acquisition, because that was a big fight for a long time.
It was a big fight for a long time. They merged back in June, so now you got to think about the synergies between the two. Some of the ads that Joseph Bank was doing were a little bit too hokey, and they learned from that. So Men's Wearhouse, very obvious, they sell men's clothing, which is fairly predictable. They think that over time they're going to be able to save over the next 2 years something like $200 million through shutting down stores that don't compete properly and make sure that inventory control is done properly. So we think this is a company that can grow, again, something like 15 to 20% per year. Cheap stock, very predictable, great company, great management.
And then finally, back to mutual fund and retirement providers. You like DST. They're having a great February. It's a short month, but I think they wish that it would never end. I think the stock's up 13% this month.
Yep.
Can they carry it on through March and April all the way?
I think they can. This is somewhat of a mundane business because they do the financial processing for mutual funds. And everybody has a mutual fund one way or the other, and they know that they've got to get it accounted for correctly. They've got to make sure that all the reporting is done correctly and that everything jives the way it should. The difficulty here is that they've had a lot of non-core assets that they've been selling for the last couple of years. This is a good thing because the buyers of this particular stock want a mutual fund processing company. 35 of their clients have been with them for the past 40 years. It's been a very fantastic relationship for them.
All right, thanks a lot, George.
Great, thank you.
Thank you for watching The Street.